Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 index. In the last update, we were testing this standard line of the Ichimoku cloud for support and a potential rebound from that zone. It dipped below there briefly and then rebounded from the turning line of the cloud here. Made its way back up only to run into trouble again at the top end of the cloud. You can see that resistance zone is quite significant. The previous test there, it fell back down below the cloud, top of the cloud there, and then the taps opened only for the market to slice right down through the standard line support zone, and now it's testing the bottom end cloud level for support. There's downside risk to this 4385 as well as this 4353 support zone. So if this correction lasts, we could see these two levels being tested. Basically, this low here as well, this August low being tested in end of last week of September, or this week or next week. So that's the kind of the risk factor. Now, this correction, we did highlight that the market's going into a very seasonal weak period. We look at seasonality on the chart here. Now, the market's still so far this year been following the seasonal trading patterns. You can see a nice little rally in January, February, correction down to March, and then a kind of a grind higher, and then a strong rally for June and July to climax out climatic top here in August, and then a correction. You can also see that there's traditionally a seasonal weak period here in September, and the market so far still somewhat following that trend, and we could see a low in October, maybe retest the 13% performance zone, or back down to the June July highs there to test those zone. But this is the average annual seasonality calculation since 1998 up until this year. And you can see the market still somewhat following a seasonal weak period in September to October, first and second week of October. Then we start to see a stronger move in the market towards the end of the year. So that's kind of in a nutshell where we are. Critical to watch out now. If the market dips below here, the outlook will enter bearish territory. Price action above the bottom in the cloud here is bullish. Price action below is bearish. So there's downside risk to this level here at 4385. Then this bottom in cloud chart level 4353. So that, if you can project a line across there, that would be around about here. And then the other low is this bottom low here. Is also a downside risk target, as well as the top end of the cloud here. That's let me just pop a line in there so we can see. Where is it? Pop that line in here. So that's the first level of downside risk. Second line, first one is that line there, but I think the futures will probably really push us through there today. And then this bottom end of the front end of the cloud is another potential support zone to be tested. If support holds here, then the upside target would be the top end of the cloud here for that particular move. If support fails here, then we're dipping below to that zone 4340, and then the other area is the top end of the cloud here, together with the other bottom end cloud. Yeah, this support zone there is also a major support zone. So these are the downside risk targets for the seasonal weakness in September and beginning October. It's 4356, 4313 basically, and 4254, 4250. These are the downside risk targets. That's on the daily. Now, if we turn to the weekly Ichimoku, price action still above the cloud. That's bullish long term. You can see the downside risk there, the daily support targets there, as well as the front end of the cloud. Yeah, that 4335. That's another support target. So we can project that across, and that coincides well with this low there. So these are the next two downside support targets to keep in mind for the current correction. Here we get that horizontal line. And there we go, and that coincides well with this low here. So these are the downside risk targets to keep in mind on the weekly. So on the weekly, we're still bullish. Outlook is above the cloud, still bullish. It's the daily one that's at risk of turning bearish, medium term, with downside support targets to these levels here. And if we turn to the 4 hour, let me just put hours. There we go. 4-hour chart. Dip below the cloud here, that's bearish overall. You can see these how far these downside support targets are, so it will be interesting to see if we're going to get to these levels in the current correction, but keep in mind, and these are the downside risk factors. And then the front end of the cloud, yeah, that if that support level does not come back, then that's a new resistance zone on the 4-hour. But we are now in bearish territory on the 4-hour, so there's a high probability that we'll test these downside risk targets on the 4-hour Ichimoku. Turning to the hourly Ichimoku cloud, in bearish territory as it sliced through the bottom in the cloud here. That was a swing trade short sale signal there. Now the downside targets to watch out for is this level there. Project that across, so it's testing that support zone, closed there yesterday. The next downside target's 4,396, and then this target down here on the hourly is 4,356. So these are the downside risk targets on the hourly, but hourly bearish, 4-hour bearish. It's the daily one that's critically close to turning into a bearish story with these downside targets. Let me just go there. Downside targets on the daily Ichimoku cloud. Just a quick note in terms of risk. This is a very narrow market rally at the moment, concentrated in a few of the large cap stocks. If we look at the S&P 500 index versus the S&P 500 equal weighted index, we can see that the market's really not performing well on an equal weighted basis. And the only performance this year really came from the large market capitalization stocks. So it's concentrated in a very narrow rally. Even if you look at the last year, 12 months trailing, you can see we've not really gone very far with a 4% return versus 14, and in the last 2 years, 3 years, we can also see how the large cap plays have really generated most of the return. So keep that in mind, that it's a very narrow rally. And so the market's still at risk of significant correction when these big Apples and Tesla and Nvidia and all these companies start to roll over. So keep that risk factor in mind. It's a narrow, concentrated rally in a few companies in the S&P, for example. So quick downside risk to these old cloud chart support levels. Upside potential is the top end of the front end of the cloud here at 4471. Until next time, thanks for watching and happy cloud chart trading. Bye for now.